Listen to me very carefully right now, because every single day, I hear from people just like you. You are 60, 65, maybe 70 years old. You worked 30 or 40 years to build up your 401k or your IRA. You saved every penny, you sacrificed, you stayed up at night worrying, and now you are looking at the news. You see inflation, you see stock market swings, you see talk about bank failures or global conflict, and you are scared. You are terrified that the money you need to live on, the money that pays your light bill, your prescription drugs, your property taxes, is going to evaporate overnight. And right when you are feeling that fear, what happens? You turn on the television, or you open your computer, or you listen to the radio, and you hear a commercial. A booming voice says, "Protect your nest egg. The dollar is collapsing. Move your 401k into a tax-free self-directed gold IRA before it is too late. Get thousands in free silver today." So, what actually is a self-directed gold IRA? Normally, when you have a traditional or Roth IRA at a place like Fidelity, Vanguard, or Schwab, you invest in stocks, bonds, mutual funds, or ETFs. Those institutions act as your custodian. But a traditional IRA custodian usually will not hold physical, tangible assets like gold bars or coins. Enter the self-directed IRA. A self-directed IRA is a specialized retirement account that allows you to buy alternative assets, like real estate, private businesses, or physical precious metals. To set one up, you have to use a special self-directed custodian, buy gold through a precious metals dealer, and store that gold in a high-security, IRS-approved depository. Notice I said an IRS-approved depository. Now let us talk about the fees, because this is where your hard-earned money gets eaten alive. When you invest in a standard index fund or ETF, your annual expenses might be practically zero. But with a self-directed gold IRA, the fee structure is an absolute minefield. First, you pay a setup fee to open the self-directed account. Second, you pay an annual custodial management fee. Third, you pay an annual storage and insurance fee to the vault facility holding your gold. Fourth, when you buy the gold, the dealer charges you a markup above the actual spot price of gold. And fifth, when you eventually need cash in retirement and want to sell your gold, the dealer buys it back at a discount below the spot price. That gap between what you pay to buy and what you get when you sell is called the spread. How are you supposed to make a profit or protect your retirement when you start down 30%? You cannot. And what about those promises of free silver or free gold if you roll over $100,000? Nothing in this world is free. That free metal is paid for by jacked up markups on the rest of the gold you purchased. They are taking your money out of one pocket and giving you a tiny coin back in the other, while calling it a bonus. It is a marketing gimmick. There is another massive problem that retirees forget until it is too late: income and liquidity. When you are retired, you need income. You need cash flow. A stock can pay you a dividend every quarter. A bond pays you interest. Rental property pays you rent. What does a bar of gold inside a vault in Delaware pay you? Nothing. Gold produces no cash flow. It sits in a dark room collecting dust while you pay annual storage fees for the privilege of keeping it there. Even worse, when you reach age 73, the IRS requires you to start taking required minimum distributions, RMDs, from your tax-deferred retirement accounts. If all your retirement money is locked up in physical gold bars, how do you pay your RMD? You either have to pay the custodian to sell a portion of your gold, taking a hit on dealer spreads and liquidation fees, or you have to take an in-kind distribution, meaning they ship the physical gold coin to your house, and you have to report its value as ordinary income and pay taxes out of your personal checking account. If you do not have liquid cash sitting outside the IRA to pay those taxes, you are trapped. Now, am I saying gold is evil? Am I saying you should never touch gold? No, I am not. Gold can be a store of value over long periods of time, and it can serve as a minor hedge against currency devaluation. But gold is an insurance policy, not a wealth creator. So here is your actionable, step-by-step plan to stand in your truth and protect your money. Number 1, never, ever put more than 3 to 5% of your total investment portfolio into gold. If you have $500,000 saved for retirement, that means no more than $15,000 to $25,000 total in gold. Anyone telling you to roll 50, 75, or 100% of your 401k into gold is selling you fear so they can earn a fat commission. Walk away immediately. Number 2, if you want gold exposure in your IRA, you do not need a costly self-directed gold IRA with vault fees and physical markups. You can simply open a regular, low-cost IRA at a major broker and buy a physical gold ETF, like GLD or IAU. These funds hold physical gold in secure vaults, track the price of gold almost perfectly, charge tiny fraction of a percent expense ratios, and allow you to buy or sell instantly with a single click of a button without paying storage fees or dealer spreads. Number 3, if you insist on owning physical gold coins that you can hold in your hands, buy them with after-tax cash outside of your retirement accounts from a reputable local bullion dealer at standard spot price markups. Keep it simple, keep it small, and keep it safe. Number 4, before you ever transfer a single dime out of your current 401k or IRA, ask the gold dealer these 3 questions in writing. What is the exact markup percentage over spot price I am paying today? What are the exact annual storage, insurance, and custodial fees in dollars? And what is your guaranteed buyback price if I need to liquidate next year? If they hesitate, dodge the question, or try to pressure you into acting fast, hang up the phone. Your retirement savings represent your freedom, your dignity, and your peace of mind. Do not let fear rule your financial decisions, and do not let aggressive salespeople bully you into complex, expensive products you do not fully understand. Protect what you have built. Stay informed, stay safe, and above all, stand in your power.